What's going on, guys? We're back with another video in the expert guide. Today we'll be talking about moving averages. Moving averages, the name sounds pretty self-explanatory. It just gives you an average of the price. And there's a couple of different types of moving averages. There's simple and exponential, but for the most part, it just gives you an average of the price, and it'll give you a line representing that average. So the simple moving average, you can find that in the indicators. It'll be under SMA, simple moving average, or smooth moving average, or just moving average. Both of them are the same. But yeah, so the moving average, what that does is it gives you an average of, as you can see here, this number is 9. So since I'm on the day chart, it'll give me an average of the last 9 days, or the last 9 candles. If it was hours, it would be the last 9 hours, or if it was minutes, and that last 9 minutes, and so forth and so forth. So it gives you the average over the last, however many you can choose and change the amount. Let's go with 10. So this will give me the average over the last 10. You change it to white. Okay. So for a longer term trader, you might want to use a higher number. A shorter term trader, a lower number. So for example, short term, I'll use 10 to 20. Medium or mid term, you probably use like 20 to 60. Anything 60 plus, 100, 200. Some people go as high as 500. You'll use, that'll be for a longer term trader. That's the simple moving average. There's one more type of moving average, and that's exponential or weighted. So you can find that here, either under EMA, the exponential, moving average exponential, or WMA, moving average weighted. Both of them are the same. Let's do EMA. What that means is the moving average is a little bit more weighted towards the more recent prices. So the simple moving average is just the last 10 candles divided by 10, and that'll give you a certain value. This will weight the value of the more recent prices a little bit heavier than those earlier prices, right? All right. So as you can see, the moving averages follow the trend of the chart. And since I have it at 10 candles, it's gonna follow the price very closely. As you can see, it's basically it's basically just following the trend of this chart. If I make the numbers a little larger, let's just say now I'm doing long-term trading, 100, you can see that now it follows the chart a little bit less. It's gonna take a lot more for the moving average to change in comparison to the price. Unlike here, you see we're under 10 candlesticks here. It's following the price very closely. This is 100. It's not following the price very closely. Another thing is I'm going to show you the difference between the moving average, the simple moving average, and the exponential moving average. So as you can see, the exponential, or the weighted one, is in purple. Now, for example, here the price jumps up, right? And since we're dealing with this price area here, like each of these points, like this is from here to here is 10 candles. So each of these points will add up the last 10 candles. Then here it'll add up the last 10 candles. Then here it'll add up the last 10 candles. As you can see, since we're on this uptrend and the weighted moving average takes into account the more recent candles, you can see that the price affects the weighted moving average more. The simple moving average, or the moving average, is it lags. So the weighted moving average, you can see that the price affects it a lot more. It makes it change a little bit more. All right, so with that being said, let me go ahead and take one of these off. Okay, so we can work with the simple moving average. Okay, so we're gonna look at some signals, or some buy signals, when it comes to moving averages. So there's a couple, or there's a way to look at it. Once the price crosses over that moving average, so for example here, that can be looked at as a sell signal, right? Now, as you can see, the price went ahead and reversed very quickly and crossed back over. Now this can be looked at as a buy signal. And if you sold here and then bought here, first you would have sold and bought at two good prices. Sold at a high price, bought at a low price. Okay, that's good. Then you buy here and you don't see another sell signal until up here. That's a good game. Then you see a sell signal, sell at a high price, buy at a lower price, right? drops back down, same thing. If you were to just go off of just that, you can see that you can make some profits off of just going off of the crossover. Now, obviously, you're not going to want to just use this alone. You're going to want to put that, couple that with other methods or other indicators. But those are some signals that you can get. Also, if you use two moving averages, so let's just go and use the weighted moving average this time. So we use a weighted moving average, and like I told you, the weighted moving average follows the price a lot more. So I'm gonna let that be my signal. And when I say signal, that's gonna be the one that lets me know whether to buy or sell, right? Let me change, I think blue's all right actually. So what I'm gonna do is I'm gonna make this regular moving average and a simple moving average a bigger time period. So now, this is called the crossover method. Whenever the moving averages cross over, and like I told you, the weighted moving average is gonna be my signal. When that crosses over downwards, that lets me know it's a sell signal. Crosses over upwards, it's a buy signal, right? So here, it would have given us a bad signal. That's okay. What I like to do normally is I like to give it some time and allow it to continue to do whatever the price is going to do, so I can see if that's a good buy or sell. So for example, if it crossed over here, let me give it some time. Oh, I don't see that the price is going too low. Okay, maybe I didn't need to sell, or maybe I don't need to sell, but let's just say I do sell, whatever. Okay, I see it cross over here again. Give it some time. By this point, I would have seen that the price is increasing. By this point, I would have seen that the price is increasing. Okay, maybe I should go ahead and get in this trade, and then look what happens. Same thing, sell. You would have seen, okay, good, let me get out. Boom, look what happens. Buy here. At this point, you probably would have been wanting to buy, but you would have seen the next couple of days, okay, good thing I didn't buy, whatever. Just give it some time and allow yourself to understand the trend that is on. But these are some signals that you can get from these moving averages. Also, one more thing, let me go ahead and take off this weighted one. So now we're looking at this 50 candle or 50 point moving average. This also can be used as a support or a resistance, okay? So here, if it was a support, you would see that, okay, boom, comes back up, false breakthrough. We've been through this in the previous support videos. Acts as a support, false breakthrough. It doesn't give you a lower low or a lower high. Boom, support, boom, support, boom, support, breakthrough. You see that? Resistance, false breakthrough, resistance. You see that? So these can be also used as support and resistances. So if you find the proper method that works for you, this moving average can be a very helpful technique in making some good trades. So as far as the moving averages, some things to remember. You want to make sure that you choose the right time period depending on what type of trader you are. For example, I'm in the day and I'm going off of the 50-day moving average. My moves are going to be made months or weeks later, right? This is October. Let's just say it was a buy signal for me. I buy. The next time I might want to sell would be, what is this? January. That's a few months down the road. So you got to figure out what type of trader you are, and you got to use this. Use the amount of days or the amount of candles to your advantage. Another thing is to practice using the weighted or the regular or simple moving averages. You want to figure out which one works best for you, which one works within your strategy. If you use both of them, how are you going to use that? And one more thing, use it alongside another indicator or alongside another method or way of figuring out what it is you're going to do in the trade, because I wouldn't recommend only using one thing. And if you do only use one thing, make sure that you're very confident in whatever trade that you're going to make. So yeah, that's moving averages. We have some more videos coming up very soon. Make sure to like, subscribe, and comment, ask any questions if necessary, and stay tuned. Thanks for watching.